Hey guys, this is Market Update. In this video, we'll look at market positioning for this breakout because a very clear and distinct breakout into all-time highs and potential price discovery. Right, 110,000 for the weekly. This is the weekly candlestick here. We're going to finish at an all-time high. The monthly candlestick, all-time high. But if you look at breakouts previously in this bull market and this uptrend, they last for a while. You're looking at 6 to 10 weeks, something like that. Once you break out, you range upwards into a new all-time high. We're at week 1. So where could we potentially get to, and will we actually carry on in an uptrend, or are we going to reverse? We'll look at that in this video. Before we get into it, if you want a 20% discount for the crypto course, it expires in a couple of weeks. So type BTC at checkout, you get the crypto course for 20% off. I update it forever for free for existing users. You can see my mate update here, and then 300 videos on getting yourself set up, investing and trading. I'll link that one down below in the description. If you look at both technicals and on-chain data, it's actually pretty constructive as well. So this bull market is ranging. It's not like the previous bull market, right? Which basically we were in a bear market, we had the pandemic, and then money printing came, and it was basically a few months of just straight up to the top end of the range, and that was it. It was over. This isn't that, right? This is much more ranging, expansion, contraction, much more like 2017, but different in its own way, right? Just a very different bull market. And so you're getting slightly less RSI moves, but more consistent. It looks like the 2017 cycle, right? Where you had these big expansions in price, a contraction down, another expansion. You come into this overbought zone for the RSI. We've had a couple in this cycle, right? That one was the Trump win. Then you had this one right here. Sorry, that was the ETFs. Then the Trump win. And then we're kind of ranging up. I think anything in this red zone is worrying because if we get an expansion, you think, okay, have we gone too far? And then we get another contraction again. But we're moving into that. So I still think there's room to move for this potential expansion, which is good because we should be at the start of it, right? We've just broken out into new all-time highs. So hopefully you would expect that to actually range up a little bit, RSI to get a little bit overdone and then maybe pull back. That's fine, right? So I'd be looking at this, but for now, hopefully positive price action as we kind of range up into this resistance zone again for the RSI. So that's pretty decent. Now, if you look at on-chain as well, you're looking at selling during these moves as well. So during the previous kind of all-time high run, you basically had a lot of selling from long-term holders. So a lot of distribution there. Like I've said in previous videos, 100K, really key resistance level. So a lot of people saying, I'm just going to let some go at 100K. So you had a lot of resistance into that. This shows that those sellers at 100K seem to be, well, way less than before. And so you have fewer sellers at that price level. What do buyers have to do? They have to bid up the price. You have to find the next pocket of resistance. Could it be 120, 125, 130, something like that? We don't know, right? But it's showing that essentially the price that the market is willing to trade at, 100K, there was a lot of sellers there, a lot of people willing to sell and trade at that level. It's less now. So that's good for a potential breakout as well, right? Because buyers have to bid up the price to find a new pocket. If you're looking at Bitcoin network flows here as well, you can see a big inflow here. So these inflows correlate to big price movements and breakouts of those previous all-time highs. You can see that here, and we've got another one. Seems like we're going through that again. So if we just range upwards and have this move, right, that's actually pretty good for this breakout as well. Then you have obviously Global M2 following that. This is from Real Vision here and GMI. If you can see the Bitcoin price in green, this potentially is looking for a price around 150, something like that, over the next couple of months into the summer. And then from there, maybe you just range for a little bit as well. But look, we don't know if this is going to hold up, but you can see the correlation previously is very, very high. So a breakout here ranging for, let's say, 4-6 weeks, maybe up to 150, something like that. And this is the average price trajectory of Bitcoin after it becomes oversold on the RSI. So if you look at the RSI here, which is this one, oversold in the RSI. I wouldn't say this is really oversold, but basically the RSI came down during this consolidation, seemed to be ranging up again, right? So what is the typical strength of that move over time? So you can see that via this chart, right? So potentially the Bitcoin price in white here, if we do range up to typically how it moves after that kind of consolidation and sell-off, again, another movement to the upside, 140, this is predicting as well. So let's say 4-6 weeks potentially for this move. If everything goes according to plan, you're looking at 150 as a price, and then maybe a pullback or a distribution from there. Of course, it may not happen, but if you're trading short term, that's what we're looking at. More fantastic news if you own Bitcoin or other hard assets is that fiscal deficits will continue. This is US government spending projected in 2025. Even worse, higher fiscal deficits. Outlays and liabilities cannot be met with tax receipts, and so the difference is paid through debt creation. Tax cuts coming in the US. Now they're trying to stimulate the GDP side and get the price level up there. So maybe that works out a little bit. But you can see the projections here is for even higher fiscal deficits. Fiscal deficits mean that the currency debases. It's a stimulus to asset prices. The price of our assets goes up when valued in the fiat currency. So great news if you hold assets. If you hold bonds or cash, not great. You're getting absolutely wrecked. But if you're a young person, you don't hold any of that garbage, right? Because you know that you're going to get wrecked in it. The inflation rate is higher than the interest you're getting on the bond. And so you're actually giving money away to the government to do this. No one owns bonds. Who owns bonds, right? You know you're getting wrecked. Now, if you've got a pension fund or anything, I think in Europe, they're actually mandated to hold bonds for the pension funds, like a certain amount of bonds, which are getting destroyed, right? So the bondholders are being enforced to buy these bonds in their pension funds. They're getting 2% interest and the inflation rate's 10%. So 8% is getting, basically skimmed off the top. I could say stolen, but I mean, look, that's basically what it is, right? 8% a year in those bonds. But if you don't own bonds, then this is irrelevant, right? What's the relevance of this? You can see here fiscal deficits lead to demand for term premiums. Essentially, you've got a government that has to issue debt, and where are the buyers? Why would someone buy debt at 4 or 5% if the inflation rate is going to be 10%? Why would anyone do that? Right? So you can't sell the debt, but it doesn't matter. You can just print money. Oh, the government's going to print money. Yeah, that's what they do. It doesn't matter if you don't own the money or own the bonds. If you own an actual asset, you just price the real price of goods and services in. If you hold stocks, you're going to price in everything that they produce. That's great. Bitcoin is outperforming all of that. So it's outperforming the S&P. If you look at everything valued in Bitcoin, S&P stocks, iPhones, right, steaks, eggs, milk, it's going down in value versus Bitcoin. So your savings are doing fantastically, right? And this doesn't matter. It's irrelevant. The only thing that matters is the volatility of returns and getting over leveraged. So if you have liabilities, your liabilities are going to be in the fiat currency, right? Dollars, pounds. And so you need to make sure that you can service those liabilities through income and that you don't use that leverage and over leverage yourself in the assets that fall in value. That's where we get wrecked. As long as you can sort that out, none of this actually matters because we're not saving in the cash or the bonds. So who cares, right? You can't cut any of this stuff. Healthcare, interest, defense, social security, none of it is getting cut. They will continue to run fiscal deficits, which means anyone that's in bonds, you're getting wrecked. Anyone that's in Bitcoin or stocks is going to do fine, right? Because you're just pricing in the real price level of goods and services. What we are learning is that there will be no material fiscal consolidation. We will continue to run extremely large deficits. That is what is going to happen. So, doesn't matter. If you're in bonds, it does. Who's in bonds? Look at the interest rate around the world for bonds, 10-year, 5%. Japan is, their 10 years going through the roof, right? So, if you hold bonds, the price of your bond is going down. So you're actually losing money on the bond when the price goes down if you need to sell it now. Or you can just wait for maturity, get your 1.5% in Japan or get your 5% in the UK. Inflation's running at like 10%, by the way, right? So don't buy bonds. You can buy T-bills if you have cash, right? Like cash management. But if you have savings, you can't buy this stuff. So what? Okay, we'll just buy Bitcoin, buy stocks. What's the big deal? There's no big deal, right? Oh, the government's going to collapse. If they collapse, every government ever has collapsed. Every government in world history has collapsed at some point. Life goes on. We're in the asset that can price in goods and services. These are government budget deficits, US, UK as well, Italy, France. So let them do it. I don't have to own their bonds anymore. I can own BTC. So 20% discount for the crypto course expires in a couple of weeks. You can see my latest May updates as well. If you want to trade on Bybit as well, you can get a $30,000 deposit bonus. Look, this is valued in fiat currency, so it's always going to go up. Go to TradingView, type Bitcoin, and then the other side of it, type S&P 500 or Pig Trotter futures or whatever you want to buy, right? See how Bitcoin is demonetizing that. That's the important thing. Make sure that your fiat currency liabilities can be paid for over time and you don't get wrecked with leverage in your assets that may fall in value and be volatile over time. That's the game. Extract yourself from that system. It's irrelevant. So that is Bitcoin, right? That's the money for our generation. Link below for Bybit and the crypto course. I'm James, it's Money TG. Cheers for watching and I'll see you in the next one.